Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Hiral Dadia. You're watching Stocks in Focus, and two counters that are on our radar today are Ajmera Realty as well as KPI Green Energy. Ajmera Realty, if you go to see, the stock is spiked to almost 12% as we speak, and this is on the back of the quarterly update that they've just given out in terms of the second quarter. Let's quickly just revisit as to what that quarter looks like in terms of numbers. Sales almost a growth of little over 50% is what we are seeing in from an area as well as value perspective. Collections have seen a growth of around 8% that has come in on a year-on-year basis. And to add to that, in the recent past, one of their subsidiaries has bagged a residential project of 470 odd crores, which is the gross development value. And this is a SRA project in Bhandup and which is in Mumbai. And a joint development agreement through a SPV in Bangalore has been done as well for a sale potential of 2.43 lakh square feet approximately. So lots brewing with Ajmera Realty and Infra. And to discuss more on this, joining us on the show is Dhaval Ajmera, Director at Ajmera Realty. Dhaval, good morning and welcome to the show.
Thank you. Thank you so much, Hiral.
Always a pleasure to speak to you. Dhaval, firstly, we've just seen the Q2 highlights. If you could just run us through as to what would the numbers mean as compared to the previous quarters.
Well, we've been, if you look at previous quarters, the sales have been consistently doing well. If I look at quarter on quarter, we are almost nearing to the same as what we were last quarter. But if I look at year on year, we are at a 50% growth. Market has been pretty good. It is receptive. People are actually looking at buying apartments in all segments, be it high end, mid segment, or even low, affordable segment. So I think the sales have been pretty good in most of our projects what we have done, and we've been pretty consistently doing well, and we hope and we are looking forward for the next 2 quarters also to go in the same manner.
Right. Overall, if you see in terms of the first quarter numbers, and if I have to compare that to the highlight that you've come up with now, first quarter we did see the volumes which were down. Sales value-wise was also down 44%. Collections were down around 47%. How are you looking at it as compared to that? Is this something which we will be, the company will be able to maintain in the coming quarters, or is it seasonality where the second one is always strong?
So primarily, two comparisons come in. It's more of a seasonality because when we start looking at this quarter, it is more of festive seasons which comes in and kicks in, which gives the reason for buyers to actually take up their projects. Secondly, also if I look at comparison, there have been projects which were launched last quarter versus this. So we had when we had Bangalore, which was launched last quarter and gave a good result. So that's where it goes. So now moving forward, it will be, some of the other projects will start becoming a hero and some projects will start coming into sustenance mode. And that's how, we are seeing sustained growth happening even the next 2 quarters as well.
Right. Apart from this, the other aspect, Dhaval, is the 470 crore project that you've recently bagged. If you could help us understand more in terms of what does the project entail, how much is the saleable area, and what is the revenue potential and timelines that you're looking at?
So, Hiral, overall, this quarter, we have acquired 3 projects, totaling to about 800 crores of GDV from all 3 of them. One is in Yoginagar, that is in Borivali. One is in Bangalore, and one is in Bhandup, which is an SRA project, and the Bangalore one is a JDA project. So these are the 3 projects which we have acquired in this quarter. The Borivali one is a redevelopment project, and it means a little special to us because that project was developed by our uncles and fathers about 40-50 years back, and today we are redeveloping that project. So that it's a very special moment for us. Secondly, the Bangalore one is a JDA with the landlord, where we are giving them about 31% in stocks as a JDA project, and 69% of the revenues will be ours. and which we are quite excited because electronic city as a market has been quite well established for us. We've almost delivered about 3,000 plus apartments in that micro market itself. So people's confidence with deliveries, people's confidence with our workmanship and projects have been pretty confident, super, and we have seen consistent sales happening as in how we launch. So we are pretty much acquiring more and more projects in and around that area. And the third one is an SRA project in Bhandup, in the suburbs of Mumbai, which is also, we are very excited because we are planning to bring in, an affordable segment for the city of Mumbai in a real affordable way, obviously to the Mumbai standards. And that's where we are looking at greater volumes and good numbers coming in from this project, which we should be about to launch in the next few months because the site has already been vacated. Primarily, the biggest challenge in a slum project is vacating the site, and we are very happy that we've already vacated the site, and we should be able to, most of the approvals are also in place, but we should be able to launch the project in a few months now.
Right. So overall, if you have to look at FY24 as a year, the last I was reading is that there are 8 ongoing projects in Mumbai and Bangalore and 3 expected to be launched in Mumbai in FY24. Any launches in FY24 in Bangalore as well? And what would that, percolate into in terms of revenues?
So, we are looking at 3 more projects coming in this financial year, apart from the acquisitions that we have done. The projects are, as we said, one is in Bangalore, one is in, and 2 are in Bombay. We are looking at a revenue of around 1,500 to 1,800 crores coming in from there. And plus, we are also looking at a few projects which we are nearing or bringing up for launches beyond what we have told. So let's hope we are trying to increase our portfolio, and things are looking very strong to have at least 1 or 2 projects coming, if possible, in this year.
Okay. So overall, what's the revenue visibility that you have from projects that are have received the OC and are at advanced stages, whereas from mid-stage projects as well? So maybe FY24 leading to the next 36 months.
So overall, from all our projects, what we see is that we have about 600 crores or coming from our existing projects or nearly ready projects, and we have around 1,500 odd crores. 4,000 total odd crores coming in from our under construction projects over the next 3 years. So, if I look at the overall potential, we are looking at about 4,000 crores coming from our existing and under construction projects.
Okay. And overall, with the trend that we've been witnessing specifically in the 2 regions that you operate as well, how would you look at the festive season overall? And secondly, what is the registration data indicating from a sales trend and a price trend perspective?
So, things have been really buoyant. People are looking at buying apartments and residential or real estate assets in all classes today. We are also seeing that this festive season looking to be promising. And my guess is that the projects which are under construction, or probably if any new launches come across, not only us but any developer will see a good sustained movement coming in. Secondly, if you look at the IGR reports which come in, at least if I have to look at Mumbai perspective per se, there has been consistently good numbers which have been showing up in the last few months. My guess is this would sustainably continue over the next few months as well. Secondly, as far as pricing are concerned, the biggest thing is, at least what I see is, not many developers have actually increased the price looking at the trend. Obviously, primarily the prices have been just right. People prefer to, buy at a price which is, right at the market and not really overpriced. And that's what many developers have continued to do so. And that is why we are seeing this movement and the trend happening. So I think till the time people and people developers have realized that it is best in to have a sustained movement rather than increasing the price, and that's what the trend has been going, and it will be a win-win for buyer and the developer both.
Absolutely. And I think that's going to be a scenario we should be waiting and watching as well. And clearly, the Q2 update that we've seen from various developers is also indicating that strength, as Dhaval has been mentioning. In fact, a good day to trade talk as well, because Dhaval, the Nifty real estate index itself has hit a fresh life high as we speak. And this is a 4.5% intraday move since 12th of September 2008. So a good day for us to speak as well. Thank you so much for joining us on the show
Thank
and
you.
sharing your views. And we will connect as soon as the numbers are out as well in terms of the quarterly numbers. But as I mentioned, the Nifty Real Estate Index has actually hit a fresh high, a 4.6% intraday move to an over 15-year high since September 12, 2008, a 609 point up move coming in on the index itself. So that's with regards to Ajmera Realty on the back of the strong numbers, and the stock is also seeing gains of around 12% as we speak. But let's shift focus to another stock which has not only reported numbers, but we've seen a order win as well. KPI Green Energy, that stock has been in focus. And overall, let's welcome in Faruk Patel, Chairman and MD at KP Group. Mr. Patel, good morning and welcome to the show.
Thank you very much.
Let's start with the earnings. Overall, from an earnings perspective, what are your key takeaways? Have they met your internal expectations?
I cannot hear you properly. What you are trying to say?
Mr. Patel, has the quarter met your internal expectations? If you see the Q2 numbers that have been delivered so far, what's your view on the numbers?
Numbers is very good today. You can see yesterday we have uploaded the result, and the our expectation was the same, which our team has delivered already. And you can see the figures. The top line is 215, and the bottom is 34.74. The Q1 was 190 and 33.26 against. And the last year, if you see the last half year, it was 282 altogether. This half year is 406. And the bottom also last year was 43.39. And this year is 68. So you can see the figures which we have uploaded yesterday, ma'am. Thank you.
Right. So overall, do you think this kind of performance is something that the company will be able to deliver in the second half of the financial year as well? Because as you mentioned, 200 crores, a 34% growth in top line. Margins have been absolutely stable. Profits have improved 64% as well. Will this continue?
Of course, this will be continuous. Last 2 years we are performing, and we have now established ourselves into the green energy, or you can say the renewable energy. And nowadays the government policy is such a lubricate and such a nice in Gujarat at least. And we are going to be going to Rajasthan, Maharashtra again, and this will be continued growth. You will see day by day and quarter to quarter. You will find all the things with the same pattern and same thing. We will go grow, and we will be deliver very good numbers.
Right. Moving on from the quarterly numbers, you've seen a recent order win of 4.2 megawatt solar power plant, as well as a new order for 6.9 megawatt capacity under the wind solar hybrid power project. Taking these two orders into consideration, what is the execution timeline? What is the kind of revenues you're looking at? And what does it take your overall order book to?
The overall order book is 541 megawatt today, including IPP and including of the GUNL 240 megawatt of IPP order. One order is Ayana, and the rest of the small order you can say. But this is our segment. We are looking for the small and the big order, all mixed product we are giving to we are doing, and the revenue will be hope that last year was 645 something, but this year, of course, that will be phenomenal growth in this company. And at the same time, bottom should be very, very nice also in this year also, you will see. And as you say, the timeline, of course, in the wind, the timeline is 12 months to 18 months, and in the solar, it's a 9 month to 1 year is a timeline for the execution, including your rainy season and all.
Okay. So, taking overall business into consideration, Mr. Patel, in the June con call, you had given a guidance of around 50 to 60% growth. Would you be maintaining the same, or do you think, taking the performance into consideration, it can be improved further?
The same, you can expect the more than the what we have delivered. Always, ye dil mange more, and the same thing we will deliver, and you.
Yeah, I think we've just lost the feed with Mr. Patel, but we will try connecting back with him. And as he was mentioning, the guidance of 50 to 60% growth, and they would expect to always deliver better than what they have guided. We have Mr. Patel who's back with us. Yes, Mr. Patel, you were mentioning that, ye dil mange more, and you will be giving out something more than what you already guided for.
Last 4th of October, the government of Gujarat has given the very good policy called RE policy, where is a very good policy is there. Looking to the policy, we are expecting more good orders and more hybrid order also in the kitty. And our team is such a good and experienced team where we will deliver the very good in CPP, in IPP also. So, and we have a very good pipeline, as you say, for the in this business, there will be the business pipeline is very much important as a evacuation and land bank, which your company have already. And on the base of the good pipeline and good evacuation, we will deliver very good numbers in the future also, and day by day we are growing, and we will be grow, and we will be targeting. We are near to our target of 25 calendar year 1000 megawatt. We almost close 887 megawatt order in our kitty, and we will deliver by the say before that our target date.
Right. So with this, if you have to look at the revenue breakup, the captive power producer, that's around 82%, independent power producer, which is IPP, that's around 18% currently. So is it that we will continue to bet more towards CPP orders? And if yes, how do margins get impacted? Because CPP is more of a volume game and IPP is more of a margin game, right?
Of course, we are increasing our IPP portfolio also. This year, you have seen we have put the say 16 plus 2.1 means 18.2 megawatt hybrid project in our kitty this year, and next year it will be increased like in a good numbers, I can say. On that basis, you can say that we will increase the IPP project with the 240 megawatt GVNL project plus hybrid project. And of course, in the, as you say rightly, that CPP is the game of the quantum, and the IPP is the game of the margin. We will do the very good mixture of the both product, and we'll make sure that the margin and tax portion and the all things in line to deliver a good numbers and good profit to the company. At the same time, with the very good portfolio also, we are increasing our target from 1 megawatt to somewhere. We will announce that also in the next quarter.
Right. My last question, Mr. Patel, coming to you is then, if the company is increasing coverage in terms of IPP as well, how does that, where does it take you to from 18% contribution to how much?
See, today you can say our internal target is say by next year is 25%, but it's too early to say how much Exactly,
Hmm.
because the day by day the policy is supporting. At the same time, your company is growing. At the same time, your debt equity ratio will be how we are going to cover, and that all things are in a process. But we will make sure that whatever we'll do, we will see the annuity income will be protected. We'll see the profit should be protected. We'll see the stand and the execution capacity and bandwidth should be in a line, that all things we will see and we will take the decision. We have a very good board and they are doing this all the things day by day and day to day in activity, and they will give us a guideline, and on that guideline we are according to that guideline we are moving ahead, and we make sure and we give you the promise on that base that we will be doing whatever business on our annuity income should be good, profit should be protected, the debt equity ratio will be protected, all the things in line, and the same time the bandwidth of the execution team also in the line. Then also we move ahead with the good numbers and good target, and you know that by 2020 2030 the government is going on a very large scale of renewable
Right.
energy. Our government is want to require for the India also, and we will
Absolutely.
contribute ourselves, and our company will be contribute more and more in the renewable energy. That's a promise. We are not giving anything false statement or any kind of the
Yes.
wrong hope to the public, but make sure whatever we have performed in the last 2 to 3 years, we will give you the 10 times on that. That's
Yeah.
a thing what we are saying
Absolutely,
today.
absolutely, Mr. Patel, and that's reflected in the stock price, which has more than doubled in the last 6 months as well. Thank you so much for joining us on the show and sharing your views overall for the investors as well. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.